Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenivek and Paul Sweeney live in the Bloomberg Interactive Broker Studio in New York. It is just after 3:30 p.m. on Wall Street, and that means it's time for the song of the day, the stock of the day, and of course the chart of the day with Dave Wilson. Are we going to get it today, Paul?
I'm feeling good about it today.
All right, well, can't be
yesterday I didn't have a clue.
Yeah, neither did I. All right, we'll see in just a few minutes. In the meantime, let's get a check on the trading day as we do get on the inside of a half hour to close of the markets. Say there, John Tucker.
Yeah, investors singing today. Mostly positive earnings, pushing stocks higher right now. Ralph Lauren jumping over 8%, handily beating analysts' fiscal first quarter profit forecast. Sales rebounded for the company. And then there's also, in that retail space, Columbia Sportswear rising after reporting a surprise second quarter profit. Earlier in the day, you had stocks in Europe topping a record. PepsiCo is going to sell Tropicana, Naked, and their other juice brands. $3.3 billion the price tag as it seeks to bolster its balance sheet. And also, we got some economic data ahead of the Friday all-important jobs report. Factory orders topping Wall Street estimates, rising 1.5% in the month of June. That is the fifth gain so far this year. Well, in New York City, they'll be requiring proof of vaccination for workers and customers at indoor restaurants, gyms, and entertainment spots. Dr. Chris Byrer is an epidemiologist at the Johns Hopkins Bloomberg School of Public Health. He'd like to see the federal government a little more involved with all these mandates.
Well, you know, what we really, of course, want to see is the federal government leading on this to have consistency across the states. But we've never had that in response to the coronavirus. And so I think what you're seeing is that people are reluctant to speak to the need for national mandates on masking, on immunization. And so it really has been up to much more local entities and the private sector to step in. I think what you're seeing is that we know these vaccines are highly safe and effective. These are the vaccines with emergency use authorization. And our only way out of this is much higher immunization rates than we've been able to achieve.
Dr. Chris Byrer, epidemiologist at the Johns Hopkins Bloomberg School of Public Health. Right now, the Dow Jones Industrial average up 263 points. We're 35,101. The S&P 500, 33 points higher. That's up 0.8% at 4421. The NASDAQ Composite Index, 71 points higher. That's up 0.5%. We're at 14,752. And we check the markets every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Tim and Paul.
Thank you so much, John Tucker. This is Bloomberg.
And this is my era, too, and I don't got it. I don't have it.
I think this is a little before your era.
Yeah, but
I think so.
I define even, I can go back.
Mm-hmm.
Is it 60s?
Down.
60s?
You're right. You're in the right track,
Okay.
yeah.
Nothing for you.
Okay.
God, over 2.
Yeah.
I feel like Carol
We
Massey.
got 3 more. She's good.
Oh,
She's good. Yeah,
she's good? Okay.
Yeah, Carol's the one
We'll
who
throw her
saves
under
me.
the bus then.
Well, okay. How about this for a hint? The original singer for this band was Rod Stewart.
Oh, Faces.
Nope. Sorry.
Before Faces?
Named for its guitarist.
All right. You're
Nope.
going to have to help us out, Dave.
It's the Jeff Beck Group.
Ah.
Absolutely.
Yeah, I see. Yeah, all right.
You know, Stewart had left by the time they did the song Going Down, so they had a different lead singer. Nonetheless, the song is particularly appropriate for today's chart because it's about something going down. Specifically, the assumptions that S&P 500 companies' pension funds are making when it comes to future returns. I mean, there's a certain logic to it, I suppose. You look at what's going on in the bond market with yields falling, and you think, well, pension funds have a lot of money invested in bonds. So you would expect perhaps these numbers to fall. Nonetheless, I mean, certainly they're in stocks, and the stock market has done relatively well. But Tobias Levkovich over at Citigroup, who's the chief U.S. equity strategist, kind of laid out where U.S. pension funds are, corporate funds, in a report. And like I say, what jumped out at me, that last year was the 10th year in a row in which the S&P 500 companies' pension funds have cut their assumptions. They're down to 5.4% in terms of annual returns from 7.6% 10 years ago. So, you got to settle for less and then figure out how to deal with that. Of course, we're not just talking about an abstraction in a sense. If you assume lower returns, that means you got to put up more money in order to meet your obligations to your pensioners, as it were. Now, it happens that S&P 500 pension assets actually rose as a percentage of obligations last year, but it was less than a percentage point. So, the idea that you have these assumptions going down at the same time, it doesn't bode well necessarily for where we go from here. And
okay, traders, it's time to place stop on profit for euro, and I'm going to place it at 118.65. Stop placed at 118.65. So if you copied this trade, please do place your stop on profit and then wait for my instruction. I'll let you know what's going to happen next. If it will move lower, you guaranteed to close your position in profit. If it will move higher, we will move to better position, to our advantage. Stop. Okay, I'll speak to you later, guys.
I mean, sure, you look what's going on in stocks. I mean, they're relatively expensive by historical standards. You look at bonds with a 10-year treasury yield below 1.2%, that gives you some idea there's not a lot necessarily to be generated there in terms of income. I mean, it's going to be a challenge not only for your kids, but for people who are retiring anytime soon.
Yeah, yep, good point. I mean, your return assumption just can't be what it was in the past.
No, it can't. And you've got to build a plan around that. So, anyway.
Well, on that glorious note, guys, thanks.
Let's talk about something more optimistic, like my stock of the day. How's that? It's a company called Harmonic. The ticker is HLIT. They make video equipment. So, if you're watching video on your smartphone or your computer, it probably got there through a piece of Harmonic's gear. At least it might have. So they came out with second quarter results late yesterday and had an unexpected profit for the period. Plus, they raised their full-year earnings estimate. Now, the third quarter numbers didn't exactly live up to what analysts are looking for in a Bloomberg survey. Nonetheless, Harmonic shares are up about 23% in the wake of the results, and they're trading at the highest price since February 2008.
Wow. Look for Dave's Stock of the Day just after 4:15 p.m. Wall Street time. It's on Facebook, LinkedIn, and on Twitter at The One Day Dave. Dave Wilson, Stocks Editor. In the meantime, let's get a check of the latest world and national news with Karen Chase. Hey, Karen.
Good afternoon. New York Governor Andrew Cuomo remains defiant in the face of new calls for his resignation from New York Senators Chuck Schumer and Kirsten Gillibrand in response to a state report that he sexually harassed multiple women and created a climate of fear in his office.
I've lived my entire adult life in public view. That is just not who I am. And that's not who I have ever been.
But State Attorney General Letitia James said her investigation revealed conduct that corrodes the very fabric and character of our state government and shines light on injustice that can be present at the highest levels of government.
Governor Cuomo's administration fostered a toxic workplace that enabled harassment and created a hostile work environment where staffers did not feel comfortable coming forward with complaints about sexual harassment due to a climate of fear and given the power dynamics.
You may want to find your vaccine card. New York City will soon require it for admission to restaurants, bars, and gyms. It's called the Keys to New York City program, and it begins next month. It's a big summer speed bump. American and Spirit Airlines have canceled hundreds more flights today, stranding thousands of passengers and stoking concerns that crew shortages are adding to the problems initially caused by weather and tech issues. Delays have peppered the peak summer travel season due to a surge in travel. Microsoft and Tyson Foods are the latest major companies in the U.S. to require their workers to get vaccinated, and it seems to be catching on. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 27,000 journalists and analysts in over 120 countries. I'm Karen Chase, and this is Bloomberg.
Thank you so much for that update, Karen. Paul Sweeney and Tim Stenovec live in the Interactive Broker Studio in New York. Paul, another day, another story about buy now, pay later.
Yeah, this is a part of the business, retail that I'm just learning about, like a lot of other people. But now Apple and Affirm Holdings are planning to launch a buy now, pay later program for Apple device purchases in Canada, stepping up the iPhone maker's ambitions to offer more financial services. Really, and this was just on the back of a big acquisition we saw yesterday in this space.
Yeah, this piece just crossing the Bloomberg terminal a few minutes ago. This from Bloomberg's Mark Gurman, who breaks more scoops about Apple than anyone else out there. Here's how it's going to work. The company's plan, according to Mark Gurman, to debut the initiative this month at Apple's online and physical retail stores in Canada. That's according to a message sent to Apple retail employees in the region, which was obtained by Bloomberg News. The service will let iPhone, Mac, and iPad buyers in Canada pay for purchases over 12 or 24 months instead of in full at the time of the transaction. Apple told staff that it will offer the program interest-free for a limited time after the launch. Paul, investors increasingly looking for Apple to get into other areas and diversify away. We think about what Apple's done in recent years with teaming up with Goldman Sachs for the Apple Card, and the way that, and Mark recently broke the story about Apple offering an Affirm-like service here in the U.S. on products that weren't necessarily even Apple-related.
Yeah, exactly. And I think, that kind of goes to the broader theme for the Apple investment story, which is growing and developing and investing in their services business to try to reduce the reliance necessarily on products and product refreshes and product launches. So that services part of their business, which is about 20% of revenue, it's growing very quickly, and they're just looking to add more things to that Apple flywheel. It feels like we all spend so much on Apple and all our devices. It's just another thing for Apple. And again, it's that flywheel we're all kind of part of.
It's certainly in my family, that's how it works. This other service that Mark wrote about a few weeks ago called Apple Pay Later, it allows the cost of any item bought through Apple Pay to be spread over multiple payments. So not just those ones not just those ones from the company Apple. This is Bloomberg Business Week, and this is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. U.S. stocks advancing, mostly positive results from earnings, offsetting concerns about a demand hit from the Delta variant and China's possible clampdown on online games. S&P 500 rising right now. You have Ralph Lauren, Gardner, Under Armour gaining after reporting their results. In the S&P 500, you have 10 of the 11 industry groups. They are higher right now. And the biggest gainer coming from energy. 10-year U.S. Treasury yield falling to 1.17%. Then you have oil slumping to the lowest in more than a week, falling back to its 50-day moving average. Federal Reserve Governor Christopher Waller said he could back a tapering announcement by September if the next two monthly U.S. employment reports showed continued gains. And investors are waiting for Friday. That's when we get the latest employment report from the Labor Department. Dow Jones Industrial Average is up 257 points, a rise of 0.75%. We're at 35,093. The Nasdaq Composite Index is up 63 points. That's a rise of 0.4%. We're at 14,743. And the S&P 500 up 32 points, about 0.75% higher at 44,19. Now we check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker and Tim and Paul. That is your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, this drive to the close. Boy, looking at this market driving hard to this close. The S&P up 0.7%, another big move. NASDAQ a little bit softer, going up 0.4%, but still a lot of green on the screen as the market continues to set new all-time highs nearly on a daily basis. But I like talking with our next guest because he looks at things a little bit different. He's not just kind of what I call meat and potatoes kind of equity investors. He looks at distressed situations, event-driven situations, some really interesting stuff. George Schultze, founder of Schultze Asset Management. He joins us on the phone from Rybrook, New York. George, thanks so much for joining us here. I mean, a bunch of us knuckleheads, we just throw money on our 401k and put it into, Fidelity Contra Fund, and we look back 30 years later and we think we're kind of legends. You actually look at some really interesting stuff. What are you looking at in a market that seemingly makes new highs every day?
Well, thanks for having me. Yeah, our main focus here at Schultze Asset Management is we observe defaults and distress, and defaults are really down a lot this year. The economy is doing pretty well, but a lot of it is due to really what we call extreme monetary and fiscal policies, including the Fed's buying $120 billion worth of treasuries and mortgage-backed securities each month. So that's really provided a lot of cheap money, and because of that, companies are meeting their obligations. In the first half of last year, we saw over $100 billion of defaults. In the first half of this year, it's only been $8.5 billion of defaults. And in July, there were no defaults at all. As a result, distressed bonds only represent 2% of the high-yield index right now, and the default rate is very low. Wow. It's only at about 1.2% versus the long-term
and what's that
average.
What's that 2% historically? That number jumps out at me. Is it typically 5%, 10%?
Yeah, the long-term default rate is about 3.6%. So it's really low right now. Last year, distressed bonds represented 29% of the U.S. high-yield index. So we're close to the historic lows here. Interestingly, energy is still the highest defaulting industry of almost 6% in total. So it's been pretty good times in the fixed income industry, and you're seeing it with low defaults right now.
So what happens when the Fed stops? What happens when the era of low interest rates and accommodative monetary policy comes to an end?
Well, there's really no way to predict, but last time the Fed tried to stop, we had this taper tantrum where there was a dramatic market sell-off, and that forced the Fed back into QE. So we think right now the bigger risk is really inflation, because it'll be very difficult for the Fed to get out of such accommodative policies, and the corollary to all this good news is inflation. We seem to be going from one major crisis to the next, and each time there's a bigger and bigger money printing bailout. So really, the only way to repay all this debt is through monetizing it with inflation by printing more.
All right, so what do you guys at Schulte do that, again, looking in the distressed market, where do you go for opportunities?
So in our approach at Schulte Asset Management, we look before, during, and after distress. And in times like this, when distress is low, when default rates are very low, we focus on those companies that were previously distressed, that had distressed debt, but then restructured that debt, where the former lenders and bondholders got new equity. And many times those companies can be value investment equities, and sometimes they have interesting events that drive them closer and closer to fair value.
Give us some examples of those.
Well, one large one that recently went through distress and still has elements of distress is Pacific Gas and Electric.
Oh, you're the second guest in just a few days to talk about PG&E. I'm a Californian, so I followed the company closely. And look, it's been in a tough. I mean, we could do a whole show on PG&E, but with regard to the fires and the bankruptcy.
Yeah.
Okay, traders, position closed on euro, as you can see. 118.65. Well done, guys. We made a profit. How long we was keeping it? We was keeping it for what? Few hours. 7 o'clock. Right now, 5 minutes to 9 UK time. So for a couple of hours we was keeping this position, and we made a profit. It's all about, as I always say, how much you decided to invest when you buy contract for this pair. And let's look further. Let's look for another trading opportunity. I'll speak to you later, guys. If I will find something, I'll let you know. Anyway, if you want to get a strategy, you can get the strategy and you can trade on your own. Otherwise, you can see we have 1, 2, 3. We have only 4, right? 4 pairs on the screen. So you can follow our trades and you can trade with us all these pairs. Okay? Stay safe.
The demographic trends in Puerto Rico have been very difficult, but I think with all the debt relief they'll be getting with their reorganization, there'll be some new opportunities there as well.
So the demographic trend, is that people moving out, or is that aging?
It's both.
Okay.
There's more people moving out though on the island of Puerto Rico. It's people have been looking for opportunity elsewhere because it's been under such distress for such a long period of time.
Hey, how are you feeling about the health of the economy? We get the jobs report on Friday, and there's sort of these competing signals that we're seeing, right? We're seeing equity markets continue to climb to record highs. We see, though, in the fixed income market, we see concerns about growth. And I just wonder how you characterize it.
So the economy is doing well. We've really recovered a lot from the dog days of COVID. Now we're in the dog days of summer, I guess. But, going forward, I think most, economists are expecting near double-digit growth into the third quarter. So things are looking pretty good. The question now is, how does the Fed get out of supporting the whole market with 120 billion of asset purchases per month? And as they try to taper that or wind it down, could there be a market sell-off or an impact overall into the economy? So what you really need is a transition from all this governmental spend, not just monetary stimulus, but also fiscal stimulus with the infrastructure spend that's coming through. And you need to try to convert that back into the private sector. And that'll be interesting to see how that evolves. I think going forward, beyond this year and into next, the comparisons will be more difficult. And with luck, though, we'll continue to see some growth.
Yeah, fingers crossed, certainly. George Schulte, it is always great to speak with you. Thank you so much for taking the time. Founder of Schulte Asset Management. He joins us on the phone, as he always does, from Rye Brook, New York.
Yeah, that's an interesting business he's in. You talk about default rates and trying to look for distressed situations is tough to find, even with a pandemic, and that's because the Federal Reserve and fiscal stimulus and has just.
In a sense, you could say it's a successful job by policymakers, right?
Yes. Yep. I mean, there's a cost associated with it. We got to pay it back sometime, but nobody seems to care about that argument and forever. So, and that's kind of where we are. And I think, we learned something coming out of with the financial crisis that, you can't go too big. And a lot of folks that believe that we didn't go big enough then, and that kind of delayed or elongated the recession.
We certainly heard that from Joe Biden in the wake of what happened in 2008. Well, we are just minutes away from the close. Coming up next, it's Bloomberg Beyond the Bell. It's our cross-platform coverage of the market close with my colleagues from Bloomberg Television. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs, as always, counting you down to the closing bell, here to help take us beyond the bell. Our global simulcast team, Tim Stenovic and Carol Mass, are out for today, but Paul Sweeney stepping in to fill her shoes, bringing together our Bloomberg Television, radio, and YouTube audience as a part of the crucial moments of the trading day. Tim, it's been quite a day.
It has been. I would say a crucial moment of the trading day was at about 11:30 a.m. Wall Street time, because since then, the S&P 500 has pretty much moved higher and not looked back. Equities really seeming to shrug off these concerns.
I was like 11:30. I was like, isn't that lunchtime around here?
Yeah, usually we don't see that type of activity, right? Look, I think that shrugging off concerns about the virus and earnings are really just showing and powering this market to new highs. I mean, we're going to talk about these in just a minute, Paul, but we got Gartner, Under Armour, Ralph Lauren, all powering the S&P 500 higher.
Yeah, absolutely. And I think one of the issues is people are trying to say, what do I do with the earnings that are coming out and the guidance? It's been so strong, the guidance, and that's what a lot of investors have been focusing on, because you can look at the second quarter numbers and say, all right, it had really easy compares versus last year, but right now, some of the guidance that we're hearing from some of these companies, they're doing it with more confidence, and I think that's what's getting investors' attention right here.
Not good comps if you're Clorox, though. What a day, worst day since 1999 for that stock at one point. Clearly, we're not going to be using quite as much dental wipe. Perhaps we should have been using more Clorox, because the Delta variant is certainly something that's shaking investors' concerns. Yeah, speak for ourselves. We've got plenty of Clorox on this set, I can say.
Although I will say, when you talk about Clorox and some of these inflationary pressures, Romaine, it was Brian Levitt of Invesco just saying that he's really looking for some of those pressures to ease, to moderate. So continuing to reiterate in this market that it isn't, as persistent as perhaps maybe we thought.
All right, getting the closing bells here. The Dow Jones Industrial Average going to finish the day up about 0.8%. That's 280 points. The NASDAQ Composite up about 0.6%. That's about 80 points. The S&P 500 right now is up 0.8%, 44.2339. If that holds, just to check my math here, that is going to be a record high, 44.2230. That was a record high from July 26. So we are above that. Of course, we do know these numbers take a little bit to settle, so one tick up or down, of course, could change this. But right now, that is a record high. As for the Russell 2000, well, it decided to get in on the party today. Only up 0.4%, but we'll take a 22.2360.
In the S&P 500, 340 companies thus far have reported. We are more than halfway through, at least when it comes to the big ones. Romaine, should I do it? Should I talk about what percentage that have beat earnings?
I go ahead.
Okay, well, yeah, more than 86% thus far have beat earnings. So it's a question of expectations, though, because expectations have been pretty high. So we haven't seen the stock prices move.
If we get to 90% next quarter, will you wear a tie?
I will. It says something about those expectations, though. It really does.
Let's do, Tim, some of those expectations that we see in this market. Let's take a look at where we stand in terms of the individual sector level. And frankly, expectations are pretty good, because when I'm looking at the winners and the losers, there's a lot of green in the losers. And that's certainly, if you're long in the market, what investors like to see. It's pretty reflationary, Tim. As you think about banks and energy and capital goods and durables, those are up anywhere from 1.4 to almost 2%. The camera follows me down to the bottom. Only 3 sectors in the red. It's media, though, and it's some of those, technology companies. So you're off anywhere from 0.1% to, more than 1.2%. But pretty much, Tim, it's been a lot of green on the screen today.
It has. Well, speaking of one stock in the green, we got to talk about Robinhood. Look, just rallying today, finishing the day higher by more than 20.
Was there any news?
That seems sustainable.
No, there wasn't any fundamental news that I saw, except for Cathie Wood continuing to add to her position. That's And I think also investors are, I don't know. I mean, this is was unloved since the IPO, right?
Yeah, and we should point out for our radio audiences, we're looking at a 24% gain here on the day. That's pretty much your biggest mover across all the tape today, right?
Yeah, and it was as high as much as 28% earlier in the day. I'm also keeping an eye on Ralph Lauren. The company did beat earning expectations, and it finished higher by more than 6%. Suits, by the way. I like maybe I should get a tie from them, Romain. Clorox, we mentioned that, having the worst day it's had in decades, finishing the day down more than 9.4%. Caroline, and also keeping an eye on Take-Two Interactive, down as much as 9% earlier in the day, finishing down by more than 7%. Certainly going to keep an eye on Activision Blizzard after it reports after the bell today.
Yeah, Activision Blizzard having a perfect storm all of its own from its own personal culture, but also, of course, the China regulatory pushback continuing on some of those gaming companies and the hit that we saw there for the likes of Tencent. We did have that sort of mood music there for a little bit more cautious at the start of trade that once again focused on China's regulatory crackdown, and we saw therefore money move into havens like the Japanese yen. We saw that on the upside. We're seeing continued inflationary pressure pull down when you're looking at oil, seeing WTI crude off by 0.8%, $70 is where we crossed in terms of commodities, though that didn't help Clorox anytime soon. They're seeing significant inflationary pressures today. And sovereign bonds are doing it quickly, a very mixed picture across the board. For example, yields pushing higher over in New Zealand, but the yields pushing lower in North America, certainly on Canada or in the 10-year. Taylor.
And you know, Caroline, usually we do yields, but unfortunately it's unch on the day. So we get back to some of the interesting earnings that are coming out as well. I'm taking a look at Match Group. Overall, the numbers look pretty good. You're taking a look at second quarter revenue, $707 million versus estimates of $690. Looking forward to third quarter revenue, $790 to $805. That's well above estimates of $770 million. Then, of course, down on the bottom line, you're getting a small miss, at least in second quarter. EPS at about 46 cents. Estimates were about 49 cents. But again, looking forward, some of that full year forward guidance, Romain, $3 billion versus estimates of 2.9. Did you say we were all on the dating apps?
Yeah, I mean, Apptopia said it was a record. Not us, but I mean, other people, people with social lives. I mean, they've been on this. It was like 15 million people in July. A lot of people, look, we kind of joke about, being a hot vac summer, but a lot of people, they've been in the house for a while.
Looking for some love. And they're looking at via Match. So we keep an eye on some of the other earnings that we're going to be getting thick and fast. But it is notable that this is a company that continues to dine out on, people getting together. Was it Bumble was recently saying that they're going to be having in a bricks and mortar venue as well to be able to go and meet, and not just meet for love, guys. We can meet there to network too. So clearly
you could do that right here.
Look, no question that there is pent-up demand. We have seen that in the way that customers use these products in July. I think, though, the question is what they're thinking about the current quarter. What they're thinking about the current quarter because of the rise of the Delta variant.
Tim, not to interrupt you, Lyft's second quarter adjusted EBITDA, that is positive, $23.8 million versus a loss that was expected of $40.2. Most analysts were looking to see if they could indeed become EBITDA positive, profitable before Uber. At least the numbers for now know that Lyft's second quarter adjusted EBITDA looking at $23.8 million versus a loss that was estimated of about $40 million. And Romain, we just take a look otherwise at second quarter revenue and improvement, $765 million above expectations.
Well, two numbers that jump out at me. The active riders coming in at 17.1 million. That's well above what the street was looking for at 15.4 million. But you mentioned this early, Taylor, here, and this is about revenue per active rider. The street was looking for 45.37. It came in at 44.63. So that's a miss, though we should point out that's still significantly higher than what it was a year ago.
Yeah, this is important for Lyft. I mean, obviously, a lot of people look at Lyft and compare it to Uber, but Lyft is a cleaner story. It's a domestic story. It's a ride-only story. And as a result, it's quicker to scale and to get to profitability. I think that's what we see here. The stock's trading up.
Talking about a muddy story, Activision Blizzard coming out with its earnings. We've all been sort of amazed at what's been uncovered in terms of the labor lawsuit, the president departing, all of this, of course, as we continue to fight the harassment investigation. But we're seeing a second quarter adjusted earnings per share at 91 cents. That's a big beat. We're seeing second quarter adjusted revenue, 1.92 billion, again a beat. And they're pushing forward to a third quarter revenue that is basically slightly ahead of expectations, but the earnings per share slightly missing on their forward guidance. So clearly we're looking to a full year that perhaps won't be as strong as people have been expecting.
And in their company statement, they do address some of the recent issues with these lawsuits and the worker walkout. The company basically saying that it basically has a commitment to a safe working environment, and it goes on to talk about some of the measures that it has taken, including with HR and investigating employee concerns, and basically says that it's creating safe spaces. No real details here, but at least they are sort of acknowledging what has really driven the stock down here over the past week.
And not to pivot too hard and confuse the viewers, I'm finally able to find the press release on Lyft and continuing to talk about those active riders, Romaine, that you mentioned, saying that we're up by more than 3.6 million from the prior quarter. We're up 25% year over year in terms of revenue growth, really highlighting, Tim, that adjusted EBITDA profitability and talking about drivers sharing in this with their record hourly earnings as we've continued, Tim, to talk about some of the pressures about gig workers, certainly back in the news today, this time with Massachusetts.
Yeah, not just regulatory pressures, as you mentioned, but also pressures to actually get people back in the driver's seat and how much the company has had to spend in order to entice drivers and how that has been manifested in the form of actual charges for the consumer. So it looks like people have been complaining about the prices of these, but actually been willing to shell it out to get in those lifts, Paul.
Yeah, it's exactly right. I mean, when Uber and Lyft came along, it really changed the whole conversation around transportation. And I think the pandemic has really called into question, A, the gig worker, and B, do I want to get into a car with somebody I don't know? And but we're starting to see that come back because, in fact, it was a big transformation of that sector.
Yeah, the answer there unequivocally yes for so many people. Well, that's going to do it for our cross-platform coverage of Beyond the Bell this afternoon. Join us tomorrow, same time, same place, YouTube, Bloomberg TV, and Bloomberg Radio. We'll see you tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Wow, that was a slew of earnings, right?
That was, and it's the one that jumped out at me was Lyft, getting to profits before Uber. But it just goes to show. I mean, these ride-hailing services, they were so transformational for so many people in terms of their transportation needs. The pandemic definitely upset the entire industry, and there will be some ripple effects. And I think one of them, obviously, that the company calls out is just drivers.
Yeah, that's certainly, and we're going to be asking Mandeep Singh all about that in just a few minutes. We're excited about that. In the meantime, let's get a check of the latest world and national news with Karen Chase right here in New York. Hey, Karen.
Hey there. The latest call for Governor Andrew Cuomo to resign comes from Eric Adams, the Democratic nominee for New York City mayor. Adams issued a statement saying Attorney General Letitia James conducted a thorough and revealing investigation that yielded disturbing conclusions about Governor Cuomo's conduct. And it is now the duty of the New York State Assembly to take swift and appropriate action and move forward with impeachment proceedings if the governor will not resign. Cuomo made a public statement denying the allegations.
I've lived my entire adult life in public view. That is just not who I am. And that's not who I have ever been.
Senators Chuck Schumer and Kirsten Gillibrand have also called on Cuomo to step down. New York City is cracking down on the unvaccinated by requiring proof of vaccination to go to restaurants, bars, and gyms. Mayor Bill de Blasio says he's trying to get through to them.
We'll be issuing a mayoral executive order and a health commissioner's order. Those are the legal tools necessary to implement this approach. And we know that this is what's going to turn the tide. And we also know that people are going to get a really clear message. If you want to participate in our society fully, you got to get vaccinated.
And the Carnival Mardi Gras docked in Puerto Rico today, the first cruise ship to visit the U.S. territory since the pandemic began. The ship was greeted with cautious celebration. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 27,000 journalists and analysts in more than 120 countries. I'm Karen Chase, and this is Bloomberg.
Thank you so much for that update, Karen. So I love reading about what colleges are doing in this day and age because here's I haven't been away from, I feel like I haven't been away from college that long, but let me tell you, I have been away from college that long. Right now, elite colleges dangle cash ski passes to ease a housing crunch. It's among the most read, this one by our own Maria Heater.
Yeah, it's interesting. The colleges are in a really unique situation, an odd situation, a difficult situation. They had kids from the pandemic that deferred their acceptance. They had kids that decided to take a year off, a gap year, if you will. Now, they're all coming back. And a lot of schools have mandates. You got to get vaccinated. You got to get back. We're not doing any of this remote stuff. So where do you house all these people? Because it is a fine science how they allocate rooms and beds and things like that.
So here's what they did in my day, okay? And I'm eager to hear what they did in your day. I went to Colby College in Waterville, Maine, and after I accepted that I enrolled, they sent me a note that said, "Congratulations. How would you like to spend your first semester in Spain?" And I said, wait a second, I didn't take Spanish in high school. I don't speak a word of Spanish, but that sounds pretty fun. And the way that I always read into this, and this was never confirmed to me by the school, was that they didn't have enough housing in the first semester, so they send X number of students abroad. There were some who went to France and some who went to Spain. And I was, in my opinion, one of the lucky ones who got to go to Spain.
I, on the other hand, went to a trailer in the parking lot at the University of Richmond. My dad pulls up and he says, I'm paying, which back in the day, it was like, I don't know, 25 grand or something, to live in a trailer. And I have to admit, I was bummed, but in Richmond, it is brutally hot down there in the early, September, and we had air conditioning. And none of the other dorms had air conditioning. So people were just piled into our mod, we called it, and sleeping on the floor. So anyway.
You live to tell the tale.
The flip side is some of my best friends today were from Mod 7, University of Richmond. Go.
I wonder if they still do, if they're still doing that kind of temporary housing. I know they built more housing at my school to try to accommodate more students. This is Bloomberg Business Week, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg newsroom with this Bloomberg Business Flash. Mostly positive earnings sent the S&P 500 today to a record. And the regular trading, Ralph Lauren, Gardner, Under Armour, those shares all gained after their earnings reports. And after the closing bell, we had Lyft. Lyft delivering its first ever adjusted profit during the second quarter. This is kind of a milestone for a company that has racked up losses ever since its founding. And the post-market right now, checking shares of Lyft among the most actively traded. Lyft up 3.8% right now. Also, Activision Blizzard boosting its adjusted earnings per share forecast for the full year, but this guidance is missing the average analyst forecast. Also, just getting Akamai reporting after the bell, adjusted earnings per share for the second quarter beat the average analyst estimate. Adjusted EPS, $1.42. The estimate was for $1.39. Next up for investors, jobs report on Friday, expected to show another robust month of hiring. Here are the closing numbers. The Dow was up 278 points, 35,116. The NASDAQ 100 was up 97 points at 15,061. And as I say, S&P 500 closing at a record of 36 points, just barely, at 44.23. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul, did you call yourselves the Mod Squad?
I don't think we did that, but
you just don't remember.
No, yeah, it was.
I'm sure you did.
It was a little grim, but we made the best of it and had a lot of fun doing it. But boy, the kids live a lot better now. I'll tell you that. Looking at dorms, dropping my kids off. All right, let's turn to Lyft. Ride hailing. I'm a huge fan of the ride hailing. I was kind of bummed. You know, obviously they got disrupted dramatically by the pandemic, but it looks like it's coming back. And Lyft turned in its first quarterly adjusted profit ahead of schedule. Let's dig into the numbers with Mandeep Singh. He's a senior tech geek at Bloomberg Intelligence. He does all the technology stuff for us.
Is that your official title, Mandeep?
Yeah, I hired him. I can call him what I want. But he does phenomenal work in the tech space and has really done some of the seminal work on the ride-hailing business, writing some really great research reports. So I recommend you take a look at them. Mandeep, talk to us about this quarter here. They got profitable on an adjusted basis a little bit sooner than expected. How did they do it?
Well, so in this case, they really went after their fixed costs last year. Okay. During the pandemic, they were very aggressive with fixed costs, both Uber and Lyft. And in this case, I think they eliminated about $400 to $500 million in fixed costs. That's what you're seeing with the EBITDA.
What is a fixed cost for a ride-hailing company?
So fixed cost is R&D, okay. You know, something around G&A, just being less promotional, less incentives. But guess what? Like we all know, the ride prices had gone up over the last couple of months, and they were able to pass on a lot of those higher costs to the consumers, and the consumers still took the ride. So that's a good sign for the business model long term.
Yeah, so let's talk about that, because that's part of the most compelling thing about the most recent 2 quarters for ride-hailing companies has been the narrative around trying to get drivers back into the seats. And the companies have struggled to do this. Bloomberg Businessweek has written about it, and they've had to pay these drivers a lot more. And not a day passes where you don't see someone complaining about how much it costs to get from JFK to New York City on Twitter. How much more are consumers paying for these services, and when will they stop paying more?
Well, looks like the higher prices are there, and consumers, to stay, and consumers will continue to pay. I think what you have to look at is from the driver pool perspective, there is a lot of overlap between the drivers for Uber, Lyft, DoorDash, all these gig economy companies. And what we have seen is the take rates for drivers are much better when they are driving for ride-sharing companies as opposed to doing food or grocery delivery. And just there is a preference for ride-sharing because it's a cleaner model. From a driver's perspective, they get to keep 75% plus tips. And so these companies have an easier time getting drivers to come on their platform. And look, from a consumer perspective, they all see the value in ride sharing for certain type of use cases. Yes, the move to suburbs is probably a headwind. You know, the airport and business rides are slow to come back. But at the end of the day, it's a better experience than the traditional taxis. And so you are going to see, you know, both Uber and Lyft do well on the ride-sharing side. The delivery side is a little bit more complicated, but the good thing for Lyft is they're a pure-play ride-sharing company in North America, and that is helping them out.
See, that's how I pitched it earlier. That's how he pitched it to me when I was trying to differentiate between Uber and Lyft. He said, Lyft's just it's a cleaner story. It's pure play, and it's a better margins, and boom, we see
and
it
it's
here.
just North America too, right?
Yeah, exactly. So, all right, so the market, the gig economy thing, presumably when the government subsidies go away, there's going to be a increased driver pool. Did the companies expect that? Did they expect drivers to come back to, I'm not sure what levels, pre-pandemic levels or just better levels, and that might drive the cost down for users?
Yeah, so the supply side will normalize. And to your point, I think by October, the companies have said they expect some normalization. But at the end of the day, you know, it's a function of demand. These companies just have to match the supply with demand. And that's the beauty of, you know, an asset-light model. So hopefully they have, you know, the pool of drivers with good ratings that they can bring back on the platform, and that should help them satisfy the demand.
So, Tim, do you use ride share?
I do when I come in really early, yeah.
Okay, has your use pattern changed, you know, coming out of the pandemic?
You know what? It's funny. My use pattern has changed. I used to just do Lyft, and now I'm an Uber person because of the rewards program that Uber has. So if you use Uber a certain number of times, you can get $5 credits toward Uber Eats. And I'm thinking to myself, Lyft doesn't have anything with a rewards program like this.
Well, they partner with Chase Sapphire, so it depends on which card you're using. Amex gives you credit for using Uber. Chase Sapphire gives you credit for Lyft. At the end of the day, these companies are trying to get to a recurring subscription model so that you end up paying, you know, $15, $20 for certain number of free rides as like at certain distance. And that is what will drive more predictability in the business model. But we're not there yet, and I think all these companies are trying to get there.
Well, Lyft shareholders certainly happy about this. And Paul, Uber shareholders happy as well. Shares of Uber moving in sympathy higher by just about 2%. That company reporting earnings after the bell tomorrow.
That'll be interesting. All right. Mandeep Singh, thank you so much for joining us. Mandeep is a senior technology analyst for Bloomberg Intelligence, joining us here in a Bloomberg Interactive Broker studio because he comes into work.
Yes, he's here.
I noticed that.
I love it when he joins us live. It's awesome. Thanks so much, Mandeep. We'll see you later. This is Bloomberg Business Week, and this is Bloomberg Radio. This
is breaking news from Bloomberg.
We take you now live to the White House, where President Biden is delivering remarks on his administration's progress on COVID-19. Take a listen.
The vaccine. I want to be crystal clear about what's happening in the country today. We have a pandemic of the unvaccinated. Now, I know there's a lot of misinformation out there, so here are the facts. If you're vaccinated, you are highly unlikely to get COVID-19. And even if you do, the chances are you won't show any symptoms, and if you do, they'll most likely be very mild. Vaccinated people almost never are hospitalized with COVID-19. In fact, according to one recent study, 95% of overall COVID-19 hospitalizations are among those not fully vaccinated. And the data shows that virtually all the cases, hospitalizations and deaths due to COVID-19 are from the unvaccinated population. Last month, a study showed that over 99% of COVID-19 deaths have been among the unvaccinated people. Vaccinated people, 99%. That means if you're unvaccinated, you are much more likely to, 1, get COVID-19, 2, get hospitalized, and 3, die if you get it. This is a tragedy. People are dying and will die who don't have to die. The data is absolutely clear. As I've said, we have a pandemic of the unvaccinated. Think of it this way. 191 million Americans have gotten at least one shot, including 70% of adults over the age of 18. 165 million Americans are fully vaccinated, but about 90 million Americans are eligible for vaccines and still haven't gotten their first shot. You know, I think there's a clear link between the lowest vaccinated, I don't think actually, the lowest vaccinated states and the states with the highest case rates. This past week, the most vaccinated state in America, Vermont, has seen just 5 new cases, 5 per day of COVID-19 for every 100,000 people who live in that state. That means on any given day, only 30 people in the entire state of Vermont got COVID-19. Nearby Maine, which has vaccinated almost 80% of their adults, has seen just 6 new cases per 100,000. But the state with the lowest vaccination rates are seeing 10 to 20 times as many new cases per 100,000 people. It's moving like wildfire through the unvaccinated community. And it's heartbreaking, particularly because it's preventable. That's why we're doing everything we can to get more people vaccinated. And we're seeing real results. In the past 2 weeks, we've seen a 55% increase in the average number of new people getting vaccinated every day. In the last 7 days alone, nearly 3 million Americans have gotten their first shot. That's the highest 7-day total in a month. Importantly, over the past 2 weeks, the 8 states with the highest current case rates have seen a doubling of the number of people newly vaccinated each day. The message is getting through, apparently. Louisiana has seen a 212% increase in the average number of newly vaccinated people in that state per day, going from 3,600 to over 11,000 people vaccinated per day. Arkansas is up 99%. Mississippi is up 125%. Alabama is up 186%, going from 3,200 to 9,150 people vaccinated per day. This will make a big difference. These are encouraging signs. We have to continue our aggressive efforts to vaccinate the unvaccinated. Last week, I announced additional steps to incentivize Americans to get vaccinated, including calling on states to offer $100 for anyone willing to step up and get a vaccination shot. You know, and already Minnesota and New Mexico have done that. And North Carolina announced its $100 incentive today. Places that have offered the $100, that'd be really good. I'd go back and get vaccinated 3 times. But all kidding aside, offered the $100 to get vaccination have seen an uptick of 25% in daily vaccination rates. We also announced that small and medium-sized businesses will be fully reimbursed for offering paid time off for their employees to get vaccinated and for them to take a child or a parent to get vaccinated. And I announced some tough, sometimes unpopular steps to keep people safe and our economy strong. All federal workers must report their vaccination status or be subject to strict requirements. Any federal worker who does not attest to their vaccination status or is not vaccinated will be required to mask no matter where they work, test once or twice a week, socially distance, and generally will not be allowed to travel for work. I directed my administration to take steps to apply similar standards to all federal contractors. If you want to do business with the federal government, get your workers vaccinated. And I also directed the Pentagon to look at adding COVID-19 to the list of vaccinations that are required for our troops, because others are required. I approved the Department of Veterans Affairs to require doctors, nurses, and other healthcare workers who care for our veterans to be vaccinated. And the good news is that now many are following the federal government's lead. In the past several days, states and local officials have come out to impose similar vaccination mandates. And the private sector is stepping up as well. Even Fox has vaccination requirements. I want to thank Walmart, Google, Netflix, Disney, Tyson Foods for their recent actions requiring vaccination for employees. Look, I know this isn't easy, but I will have their backs and the backs of other private public sector leaders if they take such steps. But others have declined to step up. I find it disappointing. And worst of all, some state officials are passing laws or signing orders that forbid people from doing the right thing. As of now, 7 states not only ban mask mandates, but also ban them in their school districts, even for young children who cannot get vaccinated. Some states have even banned businesses and universities from requiring workers and students to be masked or vaccinated. And the most extreme of those measures is like the one in Texas that says state universities or community colleges could be fined if it allows a teacher to ask her unvaccinated students to wear a mask. What are we doing? COVID-19 is a national challenge, and it must come together. We have to come together, all of us together, as a country to solve it. Make no mistake, the escalation of cases is particularly concentrated in states with low vaccination rates. Just 2 states, Florida and Texas, account for 1/3 of all new COVID-19 cases in the entire country. Just 2 states. Look, we need leadership from everyone. If some governors aren't willing to do the right thing to beat this pandemic, then they should allow businesses and universities who want to do the right thing to be able to do it. I say to these governors, please help. But if you aren't going to help, at least get out of the way of the people who are trying to do the right thing. Use your power to save lives. I've made it our first and top priority to have a vaccine available for every single American from the day I got elected. That was my priority. But let me be clear. We have a supply for every single American. And that will never change. At the same time, it's also in our national interest to share some of our vaccines with the world, which gets me to the second thing I want to discuss today. From the beginning of my presidency, I've been very clear-eyed that we need to attack this virus globally, not just at home, because it's in America's self-interest to do so. The virus knows no boundaries. You can't build a wall high enough to keep it out. There's no wall high enough or ocean wide enough to keep us safe from the vaccine and from the COVID-19 in other countries. In fact, just like the original virus that caused COVID-19, the Delta variant came from abroad. As long as the virus continues to rage outside the United States, potentially more dangerous variants could arrive at our shores again. And we know that COVID-19 in other countries stifles economic growth, disrupts supply chains, risks instability and weakness of governments. And as we've seen in the United States, the key to growing economies is to vaccinate people. So just as the American economy is recovering, it's in all of our interest to have the global economy begin to recover as well. This is about our values. We value inherent dignity of all people, the inherent dignity of everyone. In times of trouble, Americans reach out to offer a helping hand. That's who we are. And I've said before, in the fight against COVID-19, the United States is committed to be the arsenal of vaccines, just as we were the arsenal of democracy during World War II. We're backing up that commitment. We've contributed more than any other nation to COVAX, the collective global efforts delivering COVID-19 vaccines across the world. We've supported manufacturing efforts abroad through our partnerships with Japan, India, Australia, known as the Quad. During my trip to Europe in June, I announced that the United States has purchased a groundbreaking 500 million doses of Pfizer and then donate those doses, to nearly 100 low and middle income countries who don't have the vaccine. Those doses will start to ship at the end of this month. We also announced that we donate 80 million doses of our own vaccine to supply the world, which has already begun. And today, I have an important update. We've already exceeded 80 million doses that have gone out. As of today, the United States has shipped over 110 million doses of U.S. vaccines to 65 countries that are among the hardest hit in the world. Let me say it again. As of today, we have shipped over 110 million doses to 65 nations. According to the United Nations, this is more than the donations of all 24 countries that have donated any vaccine to other countries, including China and Russia, all those nations combined. These vaccine donations from America are free. We're not selling them. There are no demands, no conditions, no coercion attached. And there's no favoritism and no strings attached. We're doing this to save lives and to end this pandemic. That's it. In fact, we're donating vaccines to countries that have real issues we have real issues with. And we'll continue to give tens of millions of the doses away across the summer and work to increase U.S. manufacturing of vaccines around the world as well. And it's not just vaccines. We're continuing to provide countries in need with more testing, protective equipment, and personnel to stem the surge of the virus. We've done it in India and elsewhere. Let me close with this. I've said before, in the race for the 21st century between democracy and autocracies, we need to prove that democracies can deliver. And the democracies of the world are looking to America to lead again in two ways. First, to demonstrate we can control this virus at home. And second, to show we can help address it around the world. Vaccinate America and help vaccinate the world. That's how we're about to beat this thing. We're always going to have enough doses for every American who wants one. Our work in donating vaccines to the world is about America following through on our promises and delivering what we say we'll deliver. It's showing how American science and technology, American business and academia, and our government can all work together. Above all, it's proving democracies can deliver. And yet again, that America is back leading the world, not by the example of our power, but by the power of our example. We still have a lot of work to do. So if you're unvaccinated, please, please, please get the shot. But just don't take it from me. Just read the news. Listen to the voices of the unvaccinated patients in the hospital. They're spending the most powerful message to their families and everyone around the world. a powerful message to everybody. As they're lying in bed, many dying from COVID-19, they're asking, Doc, can I get the vaccine? The doctors have to look them in the eye and say, no, sorry, it's too late. Right now, too many people are dying, are watching a loved one dying and saying, if I just got vaccinated, if I just. Folks, this isn't about politics. The virus doesn't care if you're a Democrat or Republican. This is about life and death. Life and death. I can't say it any more plainly than this. The vaccine saves lives, and it could save yours or your child's. You know, I know we can do this. We're the United States of America. We're prepared like never before. We have the tools and the resources to save lives at home and around the world. This is who we are. This is what we do. This is why there's no nation like us on earth. Well, God bless you all, and may God protect our troops. Now I'll take a few questions.
Mr. President, I have a question for you on coronavirus, but first I'd like to start with the news of the day, given back in March you said that if the investigation confirms the allegations against Governor Cuomo, then he should resign. So will you now call on him to resign, given the investigators said the 11 women were credible?
I stand by that statement.
Are you now calling on him to resign?
Yes.
And if he doesn't resign, do you believe he should be impeached and removed from office?
Let's take one thing at a time here. I think he should resign. I understand that the state legislature may decide to impeach. I don't know that for a fact. I've not read all that data.
And he's using a photo of you embracing him in his self-defense to say that these are commonplace kind of embraces that he made and the allegations against him. Do you condone that?
Look, I'm not going to fly-spec this. I am sure there are some embraces that were totally innocent. But apparently the Attorney General decided there were things that weren't.
If I could ask you a question about the evictions. No, thank you. On the evictions and the moratorium that lapsed on Saturday night, what is your strategy to prevent potentially millions of people from being evicted from their homes, given what we are told your administration is considering a targeted moratorium is likely to face legal challenges?
Any call for moratorium based on the Supreme Court recent decision is likely to face obstacles. I've indicated to the CDC I'd like them to look at other alternatives than the one that is in power in existence, which the court has declared they're not going to allow to continue. And the CDC will have something to announce to you in the next hour to 2 hours.
On overseas coronavirus vaccines, should other high-income countries follow the lead of the United States and increase donations to low and middle-income countries?
I think those countries that have been able to cover their population and have the ability to provide either dollars and or vaccine for the 100 or so poor nations that need help should do so. We had that discussion at the G7. A number of those countries said they were going to do that. Some have followed through. The point I was making is, though, I've kept the commitment, we've kept the commitment that we would do what we said, which is more than all the rest of the countries combined thus far.
Mr. President, do you believe that Governor DeSantis and Governor Abbott are personally making decisions that are harming their own citizens?
I believe the results of their decisions are not good for their constituents. And it's clear to me and to most of the medical experts that the decisions being made, like not allowing mask mandates in school and the like, are bad health policy. Bad health policy.
Mr. President, I have a question about something that you just said.
I'm sure you do.
Thank you. You just said there is no wall high enough and no ocean wide enough to protect us from the virus. So what is the thinking behind letting untested and unvaccinated migrants cross the southern border into U.S. cities in record numbers?
There is, what we're doing, we have not withdrawn the order that is sometimes critical or criticized, saying that unvaccinated people should go back across the border. But unaccompanied children is a different story, because that's the most humane thing to do, is to test them and to treat them and not send them back alone.
Mr. President, have you spoken with Governor Cuomo today?
I have not.
And then one other question on the virus. You just said we have to continue our aggressive efforts to get the unvaccinated vaccinated. Other countries have found a lot of success in requiring vaccines in public places. New York City just announced today that they'll require vaccines for restaurants and gyms. Do you think more cities and states should institute rules like that?
I do.
Are you going to publicly call on them? Should they institute a vaccine passport type system, or it's up to each city and state to figure that out on their own?
I'm sorry, what did you say?
Do you think that they should institute a vaccine passport type system or some sort of verification to use public spaces?
I don't think they need to do that. I think they just need to give the authority of those restaurants or businesses to say, in order to come in, you have to give proof that you've been vaccinated, or you can't come in. Take a couple months.
Mr. President, can I ask you about the news of the day? One more on Governor Cuomo. You're calling for him to resign now. My question is, do you think he should be prosecuted? And what is your message to the women who have now accused him of sexually harassing them and abusing them?
Look, what I said was, if the investigation of the Attorney General concluded that the allegations are correct, that back in March, that I would recommend he resign. That's what I'm doing today. I've not read the report. I don't know the detail of it. All I know is the end result.
Mr. President, one other question on COVID, if I could, really quickly. It's the eviction moratoriums. Can you explain a little bit more why it took so long to have a possible eviction moratorium be put into place? There were people, this expired on Saturday. I'm wondering, there are folks who are saying it took too long for this to happen.
Well, look, the courts made it clear that the existing moratorium was not constitutional. It wouldn't stand. And they made that clear back in, I guess, July 15th or July 18th. In the meantime, what I've been pushing for and calling for is we have billions of dollars that we've given to states to provide for rent and utilities for those people who can't afford to stay in their homes because they can't, in apartments, they can't pay their rent. And so we're urging them to distribute those funds to the landlords. I believe that would take care of the vast majority of what needs to be done to keep people in their apartments now. And so that's what we're working on. Some states have done it and some communities have, but they have not. The money is there. It's not, we don't have to send it out. It's been sent out to the states and counties. Billions of dollars for the express purpose of providing for back rent and rent the people who are in the middle of this crisis. And that's there. That's what we're pushing now. And we've been pushing that. That's the immediate thing to do. Take one more question.
Mr. President, thank you so much. There was an expectation that you would be announcing again new vaccines to the world today, other than the ones you promised. Are you ready to send more vaccines to the world? And there is a delegation from the White House going to Brazil tomorrow. Are they bringing more vaccines? Are they announcing more vaccines to Brazil?
No. Are they announcing more vaccines overall?
Overall, and then to Brazil, for the delegation coming to Brazil tomorrow, will be bringing vaccines.
The answer is I don't know whether the delegation going physically has vaccines with them. We have provided vaccines to Brazil.
Bringing the announcement, are they announcing there?
Well, no. There's a need for several billion doses around the world. We have committed to over 500 million doses, and we're trying to provide for more and provide for the capacity of countries like India to be able to produce the vaccine themselves. And we're helping them do that. That's what we're doing now. And we're trying to, and by the way, it's free. We're not charging anybody anything. And we're trying to do as much as we possibly can. Thank you.
The
administration is about to announce a new partial eviction moratorium, COVID-related. Can you tell us any more about that, and are you sure it's going to pass Supreme Court muster?
The answer is twofold. One, I've sought out constitutional scholars to determine what is the best possibility that would come from executive action or the CDC's judgment. What could they do that was most likely to pass muster constitutionally? The bulk of the constitutional scholarship says that it's not likely to pass constitutional muster, number one. But there are several key scholars who think that it may, and it's worth the effort. But the present, you could not, the court's already ruled on the present eviction moratorium. So I think what you're going to see, and I want to make it clear. I told you I would not tell the Justice Department or the medical experts, the scientists, what they should say or do. So I don't want to get ahead. The CDC has to make this. I asked the CDC to go back and consider other options that may be available to them. You're going to hear from them what those other options are. I have been informed they're about to make a judgment as to potential other options. Whether that option will pass constitutional measure with this administration, I can't tell you. I don't know. There are a few scholars who say it will, and others who say it's not likely to. But at a minimum, by the time it gets litigated, it will probably give some additional time while we're getting that $45 billion out to people who are, in fact, behind in the rent and don't have the money. That's why it was passed in the act that we passed in the beginning of my administration, and it went to the states. We were under the impression that the states were moving this money out relatively rapidly. So, for example, if I'm in an apartment, if you're in an apartment, and you're behind on